I have my wallet right here, and I want to ask you a question. What if I pulled out a $10 bill, and it's nice, it's fresh, but it's just $10, and I told you I want to sell this to you for $15. For $20, would you buy that $30? How about $40? Would you buy this $10 bill from me for $50? How about $60? $64.90? Would you pay me that much for this bill? Well, most people will say no to that in a logical, rational world, in a rational market. With no other information but this $10 bill, and I told you it's worth $10 right now. I don't know what's going to happen tomorrow. We have no other information on it. All we know is that this is a $10 bill. And I want to sell it to you for $50. Would you buy it from me? Well, it turns out that people on the stock market would take this $10, look at it, and pay me $60 for it, and then $40 for it. And then if I came back to them the next day and told them, hey, that $10 bill I sold you for $50 is in fact worth only $10, they would get mad at me. They would say some guy named Bloomberg or some other guy named Reuters or the suits ripped them off. This is what happened with Lucid Motors. People took a SPAC. Remember, SPACs are just pots of money sitting in a trust fund, and usually it's at $10 per share. The money in that trust fund can be divided among the SPAC investors at $10 per share, plus or minus operating cost. So the money in a SPAC is only worth $10 until there's new information that we can judge that money on, that we can judge the deal on. Until there's a target, that pot of money in that trust fund is only worth $10. It's not worth $40, it's not worth $50, it's not worth $60. No one told you to buy it at $40 per share. No one told you to buy it at $60. No one told you it was worth anything more than $10 per share. So I am obviously annoyed because I respect people who have built influence here on YouTube, like Meet Kevin. I spent all of 2019 watching his show along with Graham Stefan every day on real estate. And I trust those guys. They're very smart people. They turned their careers into millions of dollars of assets. And that's impressive. So when I look to them, I expect them to be credible and to not mislead. So I was a little disappointed last night when I turned to YouTube and saw after Lucid Motors, CCIV, after that announcement, the stock plummeted and I lost many tens of thousands of dollars in a few hours. And I was laughing at that. I'm used to the stock market because what I preach in this channel is long-term investing by practicing the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hope for the long term. So when we're doing that, the short term is just a time right now that will come and will pass. But if we know what we're investing in, we know what we have, what we're holding, the long term will eventually come and we will be proven right. But along the way, there'll be volatility. Along the way, we might lose some money on paper and then gain it back, and then it might go back down and then back up. But at no point in that should we be disillusioned into thinking that the suits screwed us because we bought $10 for $40. No one told us to do that. No one. The suits didn't tell you to do that. Reuters didn't say to do it. Bloomberg didn't say to do it. CCIV didn't tell you to do it. Lucid didn't tell you to buy $10 for $40. I sure didn't tell you to buy $10 for $40. I don't know who told you to buy $10 for $40. If you did that, you have no one to blame but yourself. So I was very annoyed last night when I saw everyone on YouTube, including me, Kevin, who I respect, saying, oh, the suit screwed us. No, they didn't. Let me explain to you what happened last night. CCIV, the SPAC, went through an IPO, raised $10 per share, put in a trust fund, and then went out to find a target. They found Lucid Motors, and the news leaked. But there was no information out there about how much the deal was going to value the company on the market. That's for the market to decide after the fact. We are the market. We get to choose what we value the company at. But no one told us what their guideline was yet. All we heard was some news about the enterprise value of the deal that might come through. The enterprise value is very different from the equity value. The stock market capitalization. We had no way to know what that would be because we had no numbers yet. We had no idea how many shares were being offered and at what price. But then guess what? It gets even better because Lucid or CCIV, Churchill Capital, went out there and did us a favor. Maybe it wasn't exactly for us, right? They did it because they had to. But what usually happens in a SPAC deal is they go out, they raise their IPO funds, they put in a trust fund, and then they go out to find a target. And then once they find that target, they might need more money. So they go out to more institutional investors and say, hey, we need more money for this great deal. We need you to come in at $10 per share. But the SPAC might have ran up a little bit to like $12 or $13 per share at that point. So the PIPE investors still get that good deal of $10 per share. So they get that free money, that spread between $13, where the SPAC might have ran to at this point, and $10. So they get $3 per share free. But guess what CCIV did last night? They actually went out and they raised their PIPE at $15 per share. So what does that mean for retail investors? For the SPAC, the CCIV SPAC investors? That means that the people who got in on CCIV at $10 per share, I got in around $12, $15 per share, actually under 15 with my average. Those people who got it under $15 per share actually got a positive return on investment just by the nature of the PIPE deal. So if you got into CCIV at $10 per share and the PIPE deal was at $15 per share, valuing the company, valuing Lucid Motors at $24 billion equity value, market capitalization, then you automatically got a 50% return on your investment for free. So no, you weren't screwed by anyone. They handed you free money if you bought $10 for $10. No one said to buy $10 or $40. So if you didn't get a positive return because Lucid Motors was valued at $24 billion in equity value with a $15 per share PIPE deal, that's your fault. There's no reason. It's entitled. Entitled is the word. Who told you they were going to... No... Okay, I'm very annoyed because and this is the problem, because beginners come into the market and get fooled by people telling them that you can buy $10 for $40 and it'll be fine. No, that's not how it works. So they tell you, well, what happens is they buy in at $10 per share. They buy $10 for $10 because that makes sense, right? $10 is worth $10. So they buy it at $10 per share. And then they tell you, oh, it could run to 40 or 100 or 200 once the deal comes out. Okay, maybe they try to deceive you. Maybe the swing traders try to deceive you. Hey, swing traders will swing. Day traders will day trade. Right? People who like to manipulate people will manipulate you. So if someone tells you, hey, that $10 bill with no other information is worth $100 today, or is worth $40 per share, you don't have to listen to them. But if you choose to, that's on you. So please don't try to point at somebody else and place blame on the suits. It's not the suits' fault. Who's the suits? It's not their fault. It's your fault. You bought at $40 per share. You bought $10 for $40. So, okay, I'm ranting, right? Okay. Let me take it back a little bit. So the other thing I heard last night from people on YouTube and elsewhere was it's all because of dilution. The stock went down because it was diluted. Well, there was a fundraiser, right? The SPAC deal is a fundraiser for Lucid Motors to raise enough money to continue their operations to reach their goals. An IPO is a fundraiser. A SPAC is a fundraiser. Any fundraiser that issues more shares leads to dilution. That's a given. It's like saying you're in a room, someone opens the door to provide more air, and you get upset because there's now more air in the room. You diluted my air. That's what you're complaining about? There's too many shares in here now. So what are you complaining about? It's dilution. That's how it works. That's how fundraising works. When you issue more shares, there will be more shares. What else are you... Okay, so the point here is that, yes, dilution leads to dilution, right? More shares lead to dilution. We know that. That's like saying 1 + 1 is 2. We know how that works. So what's the point of focusing on that? That's not the issue here. The issue is that you bought $10 for $40. You bought $10 for $60. You bought $10 for $30. You bought $10 for $20, and now you're upset because someone came back and said, hey, that $10 is worth no more than $15. CCIV went and said, hey, pipe investors, we want to raise more funds at $15 per share. The SPAC investors pay $10 per share, so you're going to pay a 50% premium to that. You're going to pay us $15 per share. So all of a sudden, your $10 is now worth $15, and you're upset? What are you upset about? We got free money. If you bought $10 for $10, or $10 for $12, or $10 for $14, you got free money out of this deal automatically. You're upset about more shares, more air coming into the room? That's not the issue here. That's a given. That's how fundraisers work. There will always be dilution. If you want to raise money and you're going to issue more shares, you're going to dilute. That's how it works. That's just 1 + 1. So there's no reason for anyone to be out there saying, oh, the suit screwed us because there's dilution. The suit screwed us because we thought Reuters told us or Bloomberg told us that it was going to be a $12 billion valuation. No, in SPACs, it's the people saying that on YouTube. I know most people aren't intimately familiar with how SPACs work, but the people with the audience on YouTube, they know how SPACs work, or at least I would expect them to. They know that on these reports, it's always about enterprise value. Enterprise value, that's completely different from market cap, from equity value. They're not the same thing. So no one told those YouTubers that it was going to be a $12 billion equity value. And even if they did, that would still lead to the market correcting to $12 billion. So if that's the logic, if you said we were expecting $12 billion, but you gave us $24 billion, then they helped you. So they didn't screw you over either way. You wanted $12 billion. They said $24 billion. That's 24 is bigger than 12, right? So you got 50% more than you were expecting. What are you upset about? Even though that's not the case. Your logic is flawed, but even in your own logic, you're incorrect. So that is out the window. What are you upset about? So the answer is that people are just looking for a reason to be upset because they lost lots of money in a downturn. And those people probably didn't lose any money because they haven't sold yet. So I was up lots of money, right? When you guys were buying at $60 per share, I was hoping you would buy for $100 per share because I'm not your friend. I remember my last video, a video a few weeks ago, I said, the market is not your friend. I care for all of you, those people who watch my channel. I try to provide you the most accurate and timely information so that you can make your own decisions and do your own research. I'm not a financial advisor. You shouldn't listen to me and make investing decisions on what I say or what anyone says. Me, Kevin, whoever, Joe Smo, they're not financial advisors. Bloomberg is not your financial advisor. Neither is Reuters. The suits are not your financial advisor. So you have to do your own research. So when things go wrong and there's a correction because you took the wrong action, don't look for someone to blame. Take it on the chin and move on. Markets go up and down. So back to my point about the market's not your friend. When the news came out, no one was there to tell you that it was time to sell. But when there was rumors, they were telling you, hey, buy at 40, buy $10 for $40, buy $10 for $60 because it's gonna go up to $100, $200. That $10 you have in your hand is gonna be valued at $200 when that DA comes. And you listened. That's on you. You listened. You took the action. You opened Robinhood or Webull and you said, buy me $10 for $60. So again, this is a rant, I know. And if you don't know what I'm talking about at this point, I've covered Lucid Motors before in at least 2 videos now. So you can go watch that for more information that's not ranty. But today I just have lots of things in my head and I just gotta get it out because I just don't like when people mislead others by spreading misinformation, especially when they know better. Those people on YouTube with the large audience, they know much better than what they're conveying. So I don't like that. So it's not dilution. It's not dilution's fault. It's not Bloomberg's fault. It's not Reuters' fault. It's not CCIV's fault. It's not Lucid's fault. Oh, that's all my fingers. It's your fault. It's you. That's it. So when reality sets in, the people who told you all the rumors try to get you to buy $10 for $40. They seemed very nice before. But guess what? When the news comes out, every time, there will be information asymmetry. And you will miss out on selling at the top because you will be last to hear. Even me. I heard as I was watching my portfolio drop by tens of thousands of dollars per minute. Look at the bottom left of this video. And then go back to one of my videos from a few days ago and compare the valuation that you see in that bottom left corner. Yeah, it's real. The market goes up and down. That's how it works. So don't blame anyone else for your actions. No one put a gun to your head and say, hey, buy Lucid or CCIV on rumors with no information besides $10 per share is worth $10 per share. No one told you otherwise. At least no one credible. No one who's your friend. Right? The market, hey, the market's the market. People who get away with their swing trades and their day trades by spreading misinformation, hey, I don't like it, but I'm not going to fault them for it. That's how they make their money. Go get your money. However you got to get it, go get it. I'm happy for you. But you have to be better. You, the one who is reading that information, listen to the YouTubers. It's not anyone else's fault but yourself. It's not anyone else's fault but my fault because I had patrons who were telling me yesterday that they were selling before the news came out at 60 because they thought it was going to go back to 40 or down. And I said, hey, what if it goes up? Don't you expect to feel FOMO of missing out, fear of missing out, if it goes up to 100? I wasn't suggesting that will go up to 100, but people were suggesting that on the hype, people might drive it up to 100. But my patrons were telling me, hey, it might go down. And I said, hey, I'm just going to sit here and see what happens. And I sat there and lost about half the value of my CCIV stock. It's 91 cents by my fault. I could have acted. My patrons made a better move than me. That's why we're all in the Patreon group. That's why we have that community, to share ideas and perspectives. I don't ever claim to be a all-knowing God. So I'm happy to say when I've made bad decisions. But in this specific case, it's not a bad decision. The reason I held is because I practiced the bull mentality. I didn't expect this to plummet much further than it did. And it didn't. It's sitting at a pretty good price, considering that I got in at $14.80 on average. At the lowest, it was $12 per share. So I got in at a pretty good price. And right now it sits around 40, 35, 20 even. I'm still up more than 100%. So I'm just going to hold. That's my strategy. That's how I win. I buy and I hold. That's been proven to be the best strategy over the long term. That's it. I'm not doing anything special here. I just buy and I hold. I buy when I buy in early, when I have conviction, when I know something. Remember, investing comes down to two things. What did you know and when did you know it? What did you know and when did you know it? I knew that CCIV was potentially targeting Lucid Motors back on January 11th. And I gave great credence to the credibility of Bloomberg, who reported that rumor. So knowing that a great percentage of SPACs that are in talks go on to announce their definitive agreement to merge, I said, hey, this is worth me buying at $12 per share. It's worth me buying at $15 per share. So I did. And now I'm sitting pretty cute. Because some people out there decided that they were going to buy CCIV, which is only has a net asset value of $10 per share before the announcement. And they bought it. They bought $10. Who is this? Jefferson? Is that who this is? I don't know. I don't care. It's $10. It's not Benjamin. But some people were willing to buy this bill for Benjamins. I wouldn't do that. Avoid the FOMO. Avoid the hype. I say all the time, if you buy in on FOMO, on hype, on the way up, you're going to get burnt when it reverts. Because you'll always be the last one to find out when it's time to sell. If that's your strategy. If you're trying to swing this, swing trading is not a winning strategy. There are outliers who do well. There are people out there who do very well. And SPACs are actually very good for swing traders. But most people are going to fail. And they're going to get burnt. So please, remember, $10 is $10. You can take your chances and go up a little bit. Buy for a premium, given what you expect the future to become in some time. Buy for 10, buy 10 for 12, buy 10 for 15, maybe even 20. So you pay 2x premium, 100%. But if you're paying 200%, 400% for 10 with no information other than 10 is 10, once that news comes out that 10 is actually worth 10 or even 15, you have no one else to blame but yourself. No one else. Again, not the suits, not Bloomberg, not Reuters, not CCIV, not Lucid Motors, not the YouTubers who may have misled you, because you're the one who took the action. So I'm going to put my $10 away. And we can call it a day on this video, because I know I'm just ranting at this point. And I've been ranting since the start, but I just want to get it off my chest, because get annoyed when people mislead others and are disingenuous. It's not dilution, and it's nothing else but you. So anyway, if you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell. I will be back at some point this week to discuss the actual numbers of the deal and try to help you understand what all of this means, CCIV and Lucid Motors, what the future of this Tesla competitor has in store, and how the company is well positioned to compete with the rest of the market, the rest of the EV market, like NIO, like XPeng, and everyone else, GM and Ford, everyone entering into this market. Why Lucid Motors might be best positioned to win, especially in the luxury vehicle market. So I have many thoughts on that, and I'm going to walk you through the entire deck and share my thoughts and why I'm holding this for the long term. One of my few stocks in my portfolio, my growth portfolio, because I'm bullish on this company. But this video was just for me to get it off my chest, all of the stuff I'm hearing out there off my chest before we get to that video, so that I'm not ranting in that video. So this is just a buffer. But anyway, I know there's people out there who are going to be upset about the truth, that your actions are your actions, and it's all on you to make the right choices and not be fooled by the people out there who make their money by fooling you. And you can't be mad at them. That's how they make their money. That's how they make their bread. They have to eat. And if they're going to eat by taking money out of your mouth, or taking food out of your mouth, they're going to do it. And no one's going to fault them for that. I'm not going to fault them for that. The market's not your friend. I'm not your friend. They're not your friend. No one cares about you on the market. If they can burn you to win, they will do that, because they don't know who you are. They don't have any allegiance to you. So I need you to be very aware of that. I said this for GameStop. Same for Kodak. And all of the other hype stocks out there. The hype is fun, but at some point, the hype will end and someone will lose. And if you're not the one with the information, please don't fall too far. If you want to join us over at patreon.boacademy.org to join our Discord channel where we discuss the stocks and SPACs that we're all invested in, to help one another build our wealth together by sharing news, rumors, and diligence and other forms of communication that helps us all make better decisions in our investment journey, then join us over at patreon.boacademy.org. You'll get more access to me and get direct access to your investment questions and all of my rants in more organized written form, and of course early access to my research in written form. Yeah, that's it. I'm Lincoln with boacademy.org. Thank you again and have a great day.